You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster GIOVINAZZI from OptionPit.com. And now, get ready to hit the Option Block.
All right, everybody. That music means we are back once again for episode 2 of your bi-weekly options extravaganza, known around the world as the Option Block. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-scintillating, ever-compelling Options Insider Radio Network. Remember, if you like what you hear on the on-demand side, we're seeing new records every month, so folks are clearly discovering the content anew, afresh, amazing after almost 16 years. That there's still new folks to discover it, but there are. So if you like what you hear, keep rating and reviewing. Really does help all the new folks continue to discover the content. And of course, if you want to go above and beyond, you want to join us for tomorrow's double pro extravaganza, pro Q&A, and options oddities, pretty much back to back tomorrow. Man, my voice is going to be tired tomorrow, as well as, of course, live access to everything we do throughout the week. You want to get in there to win our Pro Trading Crate. Congratulations to Olivier this week, Olivia Himbach, our Pro Trading Crate winner for this week. You want to get your name in the hat to win exclusive cool stuff. Quite frankly, we've been doing this for a long time. We have amassed a mountain of awesome stuff, and we decided just to give it to you folks. So if you want to get in on that action, a lot of this stuff you literally cannot get anywhere else. It is exclusive, one of a kind. Some of these firms don't exist anymore. Some of these books or authors or whatever they are, some of them you just cannot get anymore. So exclusive stuff from the world of options. We've been knee-deep in it for a long time. Allow us to give it to you. theoptionsinsider.com/pro. Or for you cool kids, you exclusive cool kids, you want to go behind the velvet rope /secret club. Just don't share that with anybody, that URL, just for you. Now let's see who we're sharing with on the show today. First, let's go out to the dark and stormy shores of Maine, where we are joined once again by the rockingest of lobsters, Mr. Andrew Giovinazzi from OptionPit.com. Mr. Rock Lobster, what did you do? You turned the market around since the last time I talked to you.
I got frustrated trying to just close stuff this morning. Thankfully, I was able to close some VIX calls, some puts, some index puts. I could not close everything. I got kind of flummoxed with my SPXU trying to get out of call spreads in there. Oh my gosh. Difficult. And I was not successful. So maybe we'll get another flush down at some point, but, so I don't know what I did to the market. It's, I think this is, anyway, we'll cover that when we get to the thing. But I don't know what I did to the market to make it do.
Yeah,
this.
You're not usually the one to talk up the market. Usually, it's the other way. But today you have decided from the dark and stormy shores, you're going to play the Uncle Mike role. Speaking of Uncle Mike, let's go out now to the hinterlands of Chicago, known as St. Charles, where we are joined once again by the uncleist of Mike's, Mr. Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, welcome back to the show to you. What did you do to the market today, sir? You turned it on its ear, sir.
Well, you were going to broadcast on the option block today, so the market goes up. That's just how it works.
That is how it works. So let's get to it. A little bit of the old trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block, the portion of the show where we break down what the heck is trading on our second show here of the week, a.k.a. CPI Day, a.k.a. the number everybody pretty much paying attention to these days. And it's so funny, you know, economics at the end of the day is usually subjective. That's why they call it the dismal science. And we saw the market selling off hard earlier this morning and then almost immediately do about face. And now they are rallying hard. Kind of just emblematic right there of the many different ways you can digest this data. In fact, I'm looking at the headlines right now. They came out a few hours ago. Exact same time from Wall Street Journal and Bloomberg, looking at the exact same data. And you'd think they were looking at different reports. Wall Street Journal headlines, U.S. inflation eased slightly to 8.2% in September. Bloomberg headlines, exact same time, core U.S. inflation rises to 40-year high, securing big Fed hike. So you can look at the same data and take it very different ways. And that's pretty much what we've got going on today. Market was spooked earlier, and now we are clearly in rally mode. So they saw perhaps the Bloomberg headline first, and it was panicking, heading for the exits. And then they saw the journal and they're like, oh, he's slightly, I don't know, not so bad. And then everything has rallied since then. As we're coming in to start the show, S&P up nearly 2%. It was about 1.9%, actually about 1.86% now. It's eased a little bit. Dow up about almost 2.25%. And the NASDAQ playing the rare laggard role again, only up 1.4%. Let's see, how low did we go? Let's look at our range in the S&P today. We got down to, it was looking pretty dire early on. If my system will play ball with me, there we go. 3501 we bounced off of, listeners. My goodness. 3644 right now. What's a good 140 odd points in the S&P amongst friends, right? It's nothing. It's batting of the eye. These are the markets we are all in together, listeners. And when we kicked off the show, VIX was taking a bit of a break. It was 3180, down about 1.7 points from where it was on last show. I need a nice VIX cratering by next Wednesday. We'll see if that happens. Don't think so, but we shall see. VVIX at a keen even 100 when we kicked off the show. That was down 9 points from where it was on Monday. VXX 2080 down about 1 point exactly from where it was on Monday's show. UVXY 1260 down about 9/10 of a point. SVIX 1030 up half a point. Of course, that is the inverse product. UVIX 13.5. That's down a little over about 1.3 points from where it was on Monday's show. And last but not least, the laggard Vol Q at the money vol of the NASDAQ 3590 when we kicked off the show, down about 1.7 points from where it was on Monday's episode. Let's go out now to our resident permabull, who's just loving this. He's just basking in the glow of this 140-point swing in the markets. Mr. Uncle Mike, sir, what's lighting up your tape on a decidedly Uncle Mike type of day?
Well, it's kind of crazy in that you're right. So we make a low in the SPX of 34.91, and then we peak out a couple hours later at 36.62. So I'm actually showing 171 point peak to trough range in the market today. And so that's insane. And so on this, so going into today, I did have a small position yesterday, right? Not going into today, but yesterday before the close, and I couldn't find a cost-effective way to hedge it going into the CPI data. And so, of course, the CPI comes out 7:30 Chicago time, and the markets just tank. And I'm like, oh, thank goodness I did that. And then the markets open. I'm like, oh, thank goodness I wasn't in that. But granted, I would have gotten out at the beginning of the market, but so I wouldn't have participated in this rally had I been in it. But it's kind of it's really interesting how the market does whatever the heck it wants to. I've been staring at these charts for 20 years and staring at these markets for a long time. And so, good gosh, between the three of us, I don't even want to know how many years that we've been looking at these markets. But the point is that no matter what, anything can happen. And if the market is rising irrationally or falling irrationally, always remember the market can remain irrational longer than you can remain solvent. And at the open of the market today, I was really happy taking my 2-penny profit or whatever the heck it was on the week. But of course, right now, the market's rallying. Now, where do we go from here and what's happening? Well, the big talk, of course, is the Fed. And the Fed, it looks, some people are saying now the Fed funds rate might go up to 5%. Who knows where that's going to go? But with the CPI going higher as it did today, that's something to where it might actually happen and the Fed might need to do it. But at some stage, I think it's going to be in the near future. It's where, are you going to stop? I'm not going to stop buying toothpaste. No matter how expensive it gets, I'm not going to stop buying toothpaste. But there is going to come a point to where if I'm going to take a trip somewhere, I might not go because too much of an expense with gas, with buying food on the road. I might not do that as of yet. I'm not at that point yet, but at some point I might be, just because of the fact that I don't want to pay the high prices with which we have right now. So does that mean prices are going to be higher or lower in the next year, or has inflation peaked? That's also the hot topic right now. I don't know if I could say that it's peaked, but I think it's definitely closer to the high than it is to the low at this point. I don't see another 10% increase next year, just because of the fact that at some stage, all of that COVID money that people got is going to run out, and people are going to have to get jobs again, and people aren't going to have the availability because no one's going to be buying that expensive stuff. And what does that equal? Oh, yeah, recession. At some stage, either that's going to happen or we are going to have this soft landing, so to speak. In the meantime, though, it would not surprise me in the least for us to have these 171-point ranges on the S&P every day. So my main message today is hang in there. We had a great sell-off, and then we're having a big rally right now. For a little bit, the S&P was down over 25% year-to-date this morning. It's not anymore. And so it's going to be volatile. But like I've said before, we have a 100-plus year history of whenever the market pulls back, 100% of the time, the market comes back to make new all-time highs. Now, when are they going to make those new all-time highs? Probably not today, but they do have a 100% success rate, not including time frame, depending on how you measure success. So if you're holding your investments, things like this morning mean nothing to you, or they should mean nothing to you. If you're doing something more short-term in trading, well, you need to manage your risk accordingly, which is what we talk about on this show quite a bit. So that's what I'm seeing today, and I will turn it back to the sexiest man in options, Mark Longo.
I'm glad you remember that, sir. You know, someone's got to honor the sexiness here on the show. Yeah, just looking as you were talking, I'm just scrolling through all the various headlines and the various outlets, and it is hilarious. It is both sides of every mouth and every coin talking at exactly the same time, which can kind of be expected given the fact that the market is exhibiting exactly that today. We sold off hard, somewhere around 3%, and then we're rallying 4% now. So just with massive swings intraday. With that, listeners, you can only expect VIX to drop so much and VVIX to drop so much. Look how much vol we are actually exhibiting out there right now, listeners. It's a ton. So yes, the old Chinese curse / proverb, maybe live in interesting times. We are all living through them together yet again. We hoped 2022 might be a little bit quieter year, and alas, that is not the case. Let's go out to the dark and stormy shores yet again. Mr. Rock Lobster, it's a bunch of madness out there today. What say you about it, sir?
I agree with Mike that the market has rallied off the bottom every single time. I think I'm not even going to say I think. I know. Right now, I know that the equity market is basically like a heroin addict trying to get off the smack. The smack is the Fed continually enabling by all these ridiculous monetary MMT monetary policies. And everybody loved it. This was like, from what I can remember trading in, let's say, the 90s, the late 80s, 2000, and prior to the Fed being, I would say, actively involved after the great financial crisis. So is like, the fact that they're going to keep like adding the stimulus has put volatility in the upside and made upside skew much flatter, or upside calls much more expensive than I recall in the 90s, when we actually had that crazy upside due to the internet and just an actual economic growth, like new things happening instead of just monetary shenanigans. And at this point, the federal government is going to have a massive interest bill presented to it when they try to refund, which should change the fiscal policy of all of the G7 nations, because money is not free anymore. They simply they borrowed money for free for years and years and years and years. And the bond market is saying we are not interested in that anymore. We're not interested in giving you free money. Now, how are those governments going to deal with it? I don't know. I don't know, to be quite honest. It's clear, though, when the British tried it, it didn't work very well. It's like, we're going to go back to QE, or we're going to go back to some what I would call fiscal solution by spending more money. And listen, I'm all for tax cuts. It's just when you're already spending a ton of money, maybe you should start with spending less money and getting people like, hey, plenty of jobs out there, go back to work. So I am not sure how all this is shaking out, but I know that the equity markets shook from this transition. And they continue to shake. I mean, we were down 30% at one point this morning. We were 3,500 SPX, right? Or maybe even lower. I was too busy trying to close stuff to actually see the number. It was really difficult. And as could be, because traders were knowing that maybe we weren't going to stay down there very long. So my point of my tirade is we are trying to get out of the Fed, right? Getting out of the market. They need to be out of the market. Right now, with this inflation number, it is clear that they're going to keep on whatever their rate rising program is, right? So there's more certainty on that. I would say the more that they try to deviate from that path, that will cause greater uncertainty and probably be worse for stocks. At this point, people are like, okay, rates are going to go higher and we're going to have to deal. The economy worked fine in 2007, 2006, and 2000 with higher rates. The problem is the central bank owns a lot of debt for much lower rates by all the accommodative policy. Again, I don't know how that's going to work out. They're just going to hold on to that maturity forever, right? And then let it roll off. So at this point, we'll see what the appetite is. And I'm sure there's going to be pretty good appetite for bonds at 4.5%, somewhere between 4% and 5% coupon, right? Because inflation will not go up forever. Most of, I think, the inflation problems are government created, either the Ukraine conflict, trying to pivot away from domestic energy production. You could name all of the stuff, right? That the vaccine mandates causing supply chain issues, helping, just exacerbating problem after problem. So those things are going to start to unwind eventually, because they don't work and they haven't worked. Look at Germany, right? They have no energy, basically. France is going to fire up 40 nuclear reactors. So I think these things will work themselves out eventually. But you need to see it. You need to see it happen. And I think the stock market likes clarity. Even if rates are going up, it's clear that they're going up and people can adjust. It's the flim-flammery that causes a lot of problems. So, and we'll just see, how all that works out. And I don't have an answer for how it's going to work out. But if that's the path, the government is going to be stuck trying to borrow a lot of money at a high interest rate, which means de facto they're going to have to change the way they spend. And I think, market participants see that as a positive. I think we're at the point where the government has gotten big enough in the economy that no matter how much they spend, they can't fix anything. That's where we are. So we're at a transition. At least that's where the equity market looks. And we'll see, we'll see what happens. And to be honest, like you guys said, we live in interesting times. We'll see if the government rolls with it or doesn't roll with it. So that's where we are.
Mr. Rocklaps, I do have some good news for you. There's only one stock that is not up today. Guess which one it is?
I know it's Oatly. I was looking at those puts.
Oatly is still the biggest piece of crap out there. It's off a penny.
It is the biggest dog with fleas ever.
Good time. That's a good time to be short some puts. Get long some more, baby. Let's do it. Let's all just do it. Let's dive in to the madness of the delicious, delicious Oatly. Stock's garbage, product pretty darn delicious. So there you go, listeners. No love for the Oatly. What there is love for today, though, listeners, probably not surprising given the just mad level of the whipsaw out there today, is there is some love for VIX options paper. In fact, it's added another 100,000 contracts just in the last few minutes. It was 596 when the Rock Lobster started talking. It is 701 now. That's some paper. You haven't seen VIX hit these levels. Hit a 1 million not too long ago. And outside of that, it's been a while since we've really flirted with these levels by this time of day. It do seem like we're on track for a 1M handle day, listeners out there. The ADV 607, so back north of 600,000 listeners. It was below 400,000 not that long ago, about a month and change ago. So the worm has turned out there, at least from a VIX perspective. And if we keep doing this in the market, listeners, kind of hard to blame them. Let's see if SPY has added a whole bunch more paper as well. It was at 7.91 million contracts. A little bit quieter, 8.09. They've only added, about 200,000 contracts since we started talking out there. So intriguing stuff. 8.09 million for SPY. That puts it almost at the ADV. The ADV is 8.85 million. So, yeah, they're probably going to hit that today. The S, my goodness, 2.43 million contracts out there. We had someone writing in recently asking about the historical volume highs for the S, and I'm trying to see where we are. I'll have to dig into a little bit while we're talking right now. My goodness. We hit 3.83 million on September 23rd. That would be the high, listeners. So we're not quite there yet. But we are on the road. If you want to know what the low was, it was October 28th of last year. So we're coming up on the 1 year anniversary of the volume, the near-term volume low in the SPX out there. So intriguing stuff. 2.43 million right now. The ADV, 2.87 million. Man, 3.83 million. That is nothing to sneeze at in the S. Small caps, IWM, 910,000 contracts already. That's pretty much already at the ADV of 980,000. Man, small caps are banging away out there. Let's see what our friend IWM is up to. It is up 2.14% right now. Man, small caps are swinging, doing a lot of living out there. If you want a deeper dive into small caps, including all things RUT and the options and the vol and everything, stay tuned for TWIFO coming up in a little over an hour for all you pro folks. And for all you on-demand folks, just wait till it hits the network, then hit next on your device of choice. And the Qs, 2.82 million. The ADV, 2.85. Man, this is the closest we've seen the S and the Qs in quite some time out there. Interesting times we are all living in collective. Let's go out to the micro. We talked macros, talk micro now. Let's see what single names are lighting it up out there today. Spoiler alert, Oatly is not one of them. We got the Flicks coming in at number 10. Haven't seen them in a while. 237,000 contracts, by the way. That's what it costs you to break into the top 10. So on a crazy whipsaw-y day, it's actually pretty impressive. You can see days like this when everything is whipsawing so crazy that maybe the micro numbers are a little bit lower, but not today. 237,000, that's respectable for a day like today. Netflix, by the way, up 7.25 or 3.3%, trading right around 228 and change right now. Then we jump up again. Number 9, we're already at 332,000 contracts. So it's a beefy day, listeners. It's thick out there. Not a thin market at all today. Very thick. We got Ford up a quarter, 11.78, shrugging off those recent lows. It hit out there about, 11.20 and change recently. Yeah, 11.24, so up pretty much exactly 50 cents from the lows out there. I think that was just yesterday. Yes, it was. No, that was this morning. I hit that low this morning. Yes, so they're up 50 cents from that. 332,000 contracts. Number 8 here. Back to the memes, listeners. Back to the memes. Haven't seen this one in the top 10 for a little while. AMC, the apes, on the rampage today. Up 20 cents, about 3.5%. They're a little bit north of $6, $6.06 right now. That's good for 357,000 contracts. Let's see, how low did it get today? 547 and the high of 628. So not bad. Not bad. About almost 80 cent range on the day out there. So intriguing stuff for AMC. Are you back in the ape camp, listeners? Are you loving up some apes? Let's see, how low did it get? It's like that low was today as well. 547 was the low today. So intriguing. Number 7, the Rock Lobster's favorite name when he's not talking about, EWZ or Vale. He's talking about Softy, 378,000 contracts. Actually, he hasn't talked about Softy in a while. Maybe he's washed his hands of it. It's up a whopping 9 handles or 4.4% today, trading close to 235 right now. The low for the day was 219. Man, interesting. That also, ironically, their 52-week low. I think we want to see that for a lot of the names today, listeners. Where we got here? Number 6. Number 6, we're going out to Meta Platforms, formerly known as Facebook. Did you see their new Meta Quest, $1,500 for their VR headset? That's the world we live in, listeners. $130.70, up 3.2%. Their low came this morning, $122.53. A lot of names putting in new lows this morning. Wow. Number 5, going out to Chip Zone now. Chip Zone hanging out number 5 today. That's NVIDIA, 510,000 contracts, $4.50. 119.5 is where it's trading right now, nearly 4% on the day. The low this morning was 108.13. Coincidentally, also, it's 52-week low. Number 4, still hanging out in the Chip Zone, listeners. It's AMD, 519,000 contracts, trading just a penny shy of $59 right now, up $1.14 or nearly 2%. Their low, 54.57 this morning. Also, their 52-week low. Here we go. Now we have a more usual trifecta at the top of our list, listeners. Number 3, it's the Amazonians, 825,000 contracts. They're still down on the day, down about $0.75. Their low was 105.34. So there, we mentioned before, they're still not really within that close of a range of their 52-week low. That was 101.25. They're 112.13 right now. They did get within spitting distance of it this morning, though, 105 and about a third. So they were starting to get perilously close at 52-week low. Then they rebounded off it again. Good for 825,000. Let's see what's going on with the big dog. Where there goes Apple, there goes the market. Apple, by the way, good for 1.25 million contracts right now. So that's some usual Apple paper that we're used to seeing again. It's up about $3.50 or 2.5%, trading right around 141.80 right now. Let's see the low, 134.37. So got within range of their 52-week low. That was 129.04, but not quite low enough. And now, I said it before, the market hates to see Apple red. They had to drive it green today. That means the big dog, once again, listeners, Tesla's just moving on into another level. They're moving on up like the Jeffersons here. They're saying, Apple, see you later, kid. 2.16 million contracts today for Tesla. Right now, it's up about 465 or a little over 2%, trading 221.85. The low for the day, 206 and about a quarter. The high, close to here, 222 and about a half out there. So quite the rock'em sock'em range here for Tesla. You have a range like that, you can see why you're putting up some numbers. Apple just needs to whip around all over the freaking place all day, and then it too can match these ridiculous multiple days over 2 million contracts for Tesla. And what else is on the docket? All this macro, people forget the single names, but it's back, listeners. Earnings season is upon us once again. Sometimes it's fun just to sink our teeth into small, bite-sized names and numbers that you could easily quantify and analyze, as opposed to the whims of the macro that go hither and yon and don't often make a whole heck of a lot of sense. This week we have PepsiCo. Yesterday, today we got Delta Airlines, Domino's, a pizza, and the old Walgreens Boots Alliance, a.k.a. one of my favorite tickers of all time out there. And Friday, we've got the big names popping off. This is where it really starts in earnest. We got JP Morgan, we got Morgan Stanley, Citi, Wells Fargo, US Bancorp, PNC, aka the financials popping off tomorrow. That's where earnings season really starts in earnest. By the way, hotly updated right off the press, right before showtime, earnings move results, season, all that good stuff. All those reports available for you for free because we like you. TheOptionsInsider.com. Click on the options, news, and articles tab to find them all. By the way, you want to deep dive into how you should trade options during earnings season. We had Mr. Matt, the creator of all these reports, joining us as a special guest yesterday on Options Boot Camp. So if you missed that one, check it out. He was just in town. I feel bad. I missed him. He was just in town at a conference talking about that exact topic. He did a whole panel on trading options around earnings. You folks, if you couldn't make it to Chicago, you got it on Options Boot Camp for free yesterday because we like you folks. Let's look at a couple of quick here earnings move results, and we'll get on to the odd block. We had Domino's Pizza before the bell today. They were trading 301 3/4 going into their announcement. They're pricing in 6.7%. They're delivering 8.2% right now. By the way, spoiler alert, if you missed boot camp yesterday, I've been leaning this way. I think Matt's leaning this way now as well. He says that he thinks this is going to be another banger season. We're going to see some outperformance from a vol perspective. So batten down the hatches, listeners. Walgreens Boots Alliance. What are they allying against? Who knows? It just sounds awesome. I actually think that's the name of the British chain that they acquired. But it sounds much more fun if you think of it in a Star Trek Romulan Alliance context. 13th before the bell. It's right around $32 is where they were trading. They're pricing in 6.4%. And Walgreens Boots Alliance says, hold my beer. I don't really need a lot of juice today. Only 1.7%. So they're underperforming. Let's go to Delta Airlines as well. Today before the bell, 29.25 is where they were going into their announcement. They're pricing in 6.1%. They delivered 1.3%. So far we are 1 for 3 in the outperformance camp. But there's a lot more. Those are just a few that I broke down for you. There's a lot more in the results report, listeners. And if you want to look at upcoming names, oh my goodness, we could do the whole show. We won't. We could do the whole show on how many names are popping off soon. Coming up just next week, listeners. Bank of America, J&J, IB, Netflix, United Airlines, IBM, Tesla, American Airlines, good old Telephone, for the old timer that is the Rock Lobster, and Snap. It's just a handful of names you may have heard of that are popping off. You can see all the reports for all of them right now for yourselves. TheOptionInsider.com is the place to go, listeners, as we keep on rolling into the weirdest, the wildest segment of the show. It is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by TheOptionsInsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block, the portion of the show where things get weird, things get wild. This is one of those days, listeners. Things are whipsawing so much. Everything is so macro-focused. Not a lot of silly little activity to sink our teeth into today. In fact, I'm going to re-rack it while we're talking right now. And it's pretty much about the same as it was this morning. So let's go out to a newcomer when these kind of things happen, listeners. Let's go out to, we might have talked about this one, but it's been quite some time since we've talked about good old Frontline, ticker symbol FRO, trading right now $11.28, up 48 cents, or about 4.5% on the day. Let's see, a year ago, this thing was trading $8.65, so a little bit south. Then it sold off hard going into the end of the year, got down to their low for the year of $6.10, right around December 1st. Hung out there for a while. Then in late January, it started rallying. I wonder why. I'm not sure what could have happened in the February timeframe that could have perhaps sent energy-related names skyrocketing. Got up to 10.33. Then it kind of gave some of it up again. Got back down to $8 on March 14th. Hung out there for a while. Then rallied again on May 27th to 11.43. Then gave it up again. This one was interesting. Unlike a lot of other energy names, which they had longer runs to the upside, this one had fits and starts. Got down to $8 again on July 11th, and then it rallied hard. It went from $8 all the way up to its high for the year of $13.85. That was on September 19th. And then they have given it up again. They came right back down to about $10.33, so still north of where they started the year, but This one has had a lot of hard times, struggled to maintain any of its rallies out here. And right now it's trying to rally a little bit again. It's gone from that recent low of 1033 up to where it is right now. See, how high did it get today? 1133 is pretty much the recent high out there. So there we go. Can it do it again? I guess we'll find out. What do we find out here, though? I mean, this is a bit of a weird one, but hey, that's what the odd block's all about, right, Mr. Rock Lobster? What first came across our radar was 2,000 of the Jan 12 calls going up for $1.09, so pretty much lifting the offer. That's a 68.5 vol. And we thought, well, that's kind of weird. That's a decent amount of paper for this name, though. Let's just send the Eye of Sauron back, see if it can find anything else. So back it went, sending its fiery gaze into the deep recesses of FRO to see if it could ferret out anything else. And it found another block of those calls actually going up about 10 minutes before it for $1.10 as well, 2,000 times. Now you got a total of 4,000. That's weird. And then it found more, actually kept digging and went back earlier and earlier. And the day actually started with about 900 of the Jan 12 puts going up. Paper selling those for $2.35. So you look at that and say, oh, well, that's weird. And then you see 2,000 more going up about the exact same time for $2.40. So right off the bid pretty much again. So they're selling 2,000 of the Jan 12 puts, and they're buying 2,000 of the Jan 12 calls. Looks like a conversion reversal to me. But then the weird thing about it is they did it, an hour and a half apart. If you know anything about conversion reversals, listeners, you are effectively legging into a synthetic underlying position. So you tend not to mess around with these too much. Let's see, where was the stock? They sold the puts. It was 1089. And then they waited and they bought the calls and the stock was 1110. So they cost themselves money, Mr. Rock Lobster. If they had bought the calls when the stock was 1089, they could have got a better level. I'm assuming that's what they were up to. Again, very rare to see someone legging into a conversion reversal like this. But again, this is a weird year, Mr. Rock Lobster. What say you on a hour and a half apart, potentially legged conversion reversal, sir?
Nothing like waiting an hour and a half to leg those. Huh?
That's like some of the guys at the old SIBO. They put up a trade, they get hung on their stock, and they're off to series for a couple hours, right, till the stock comes back, right? That's what this guy was doing. He didn't like, he got his puts, and he's like, I'm going to go to series for an hour or two, then I'll come back and buy my calls.
I have to say, I just like this stock is just fro. You know?
Froyo, baby.
Just fro. What are you trading? I'm trading some fro today. You know? What is also interesting is that it's not like I'm seeing 4,000 calls and 6,000 puts. It's a little funky.
Yeah, the ratio is funky too. They did more. You're right.
Wow. I would just say this is kind of a head scratcher. Like, so they bought calls and sold, and looks like I guess they hit the bid and then they're offered on the puts. So do they want to just be long? Did they come up with some kind of cool way to get long, they thought? You know?
That's the hot new trend, ratio conversion. I'm not sure if you heard of that. You do them ratio.
Well, I mean, this is it's an international shipping, seaborne transportation of crude and oil products. So you would think if there was ever a time where these ocean-going vessels would be bringing precious crude to the thirsty Europeans, it would be right now. So I think somebody's just maybe they think they invented some cool trade. I don't quite know. Like, well, you know, we sell those puts at 2.5, and the stock goes up, and they go out worthless. And then and we're going to get these 10 calls for $1.50. It's like free. You know, I think that's. I hate to say it, but I think that's what they thought. And by the way, if the stock goes to 12, it's going to work great. So, and it was a $14 stock. So I'm just trying to go over the conversation between the customer and the broker. Like, oh yeah, it'll be great. Cause I've had students that have done that where they sell, okay. They think the stock is going way up. So they sell a put that's $6 in the money. Right. And then they take the money and they buy calls with it. And And I've also seen it when the trade actually works, right? Where the puts are like near worthless and the calls are up like $5 and they don't sell the call.
What are you doing with these students? You got to smack them around a bit. Say, hey.
No. You try to tell them, like, okay, this is a great time. No, man, this thing could double. Okay. Like to each his own. And listen, I had troubles trying to close. I would not, sell. I would not. There was no bid to hit. Basically, that was the problem, or I would have, right? I just should have pushed the order in anyway, even though I couldn't really see a bid. I would have maybe got my limit, probably, possibly. It was not really trading, but it's one of those things where I could see how this would work. I've seen people do this. And that's why it brought this memory back to me.
Painful memories. It's like your personal Vietnam coming back to you.
Thankfully, they did close the puts, because there's nothing like seeing a put that you sell for $7 or $8.
But I can totally see that conversation happening.
Go to like a quarter, and then thankfully it closed them because they took that money off the table. And then watch the put go right back to $6.
We've seen that a few times on the odd block.
Worked forever. So I have to say, I have seen that. I witnessed. You can only, you can tell somebody that isn't a hugely aggressive upside move. And if you get the move, it's going to work out great. And, when you trade options and you get the move, you should be satisfied, right? But anyway, that's that it did bring back a little flashback.
I think I could totally see that conversation happening. This guy says to the broker, I sold those puts for how much? Excuse me, how much? Got the hiccups here. How much? I could buy 2 of the calls, right? And that's probably how that conversation went down.
Probably, yes.
He had an hour. He had an hour between trades. He had an hour just to work himself into a lather and say, I could buy 2 of these. Why don't I buy 2 of these? And so,
it's interesting, though, that it's an oil shipping name. It does look pretty. From the way the paper's trading, it kind of looks bullish. They had to work that sale down, and the 12 puts right now are $2, and the calls are 115, 120. So the option block early success indicator is all signs go in this group.
This is my new trade of the year here: ratio conversion reversal. I love it. There's a reason why no one's doing them. This guy's creating his own new trade. Now, let's go on out. Again, it's kind of a quiet, excuse me, man, hiccups hit me today, listeners. Going out to another name we haven't talked about, I don't know if ever on the show. Not exactly the hottest of names. Wow. What was in that water I just drank? But not exactly the hottest of names. But if you've hired a freelancer anytime in the last decade or so, you are familiar with this. Wow. This is Upwork, formerly known as Elance. I like the Elance name a little better. Upwork, not my favorite name, but if you go out there to hire pretty much anyone for anything these days, then Upwork is the place you're going to. Trading $12.96. Rough year for them. They're off 77%. On the year. A year ago, they're trading $56.60. They got to their high for the year shortly thereafter. October 25th, they got to 61.90. Man, my goodness. And then that was all she wrote. It pretty much straight down from there. By March, they were already trading $18. So they clobbered this thing in just the span of a few months. And ever since March, it's been kind of gently drifting down the remaining $6 down to where it is right now, right around $13. Let's see, the low was $12.21, which ironically, came in this morning. $12.21. And what do we find going up in Upwork? This name that does 500 contracts a day. Today, someone put up 1066. Interesting year. Invasion of England, Norman conquest year. So all sorts of, fun stuff. They bought the Jan 12 half puts. So the stock hit its low of 12.21. I'm guessing somebody freaked the heck out. Bought the 12 half puts for $1.75, lifting the offer when the stock was actually not that far from where it is right now, $12.87. It's only a dime lower. And that's a 76 vol. excuse me, man, there are earnings on October 26th. So coming up in a couple of weeks here. This obviously going to have a few cycles between now and Jan expiration. Let's see here. So yeah, $1.75, 12.5 puts. Mr. Rock Lobster, they're expecting this freelancer market to fall out of bed between now and Jan expiration, sir. What say you? While I go scare myself out of the hiccups.
Yes, you're going to drink. You need to stand on your head and drink water. And then you have to post pictures of it on Twitter that you did that.
Oh, I love my chat. They're trying to scare me. They're typing boo. Didn't work, option guy, but nice try anyway. Yes. Yeah. Thank you for the effort. What a caring bunch we have.
Upwork, huh? Well, there's WeWork, Upwork. It's all a bit of a smoke show there, right? So let's see here. Let's see here. Just canceling some orders. I'm tired of people leaning on my orders. Let's see here. Oh, man, I forgot that Jan 2023 is right around the corner. Maybe they thought this was WeWork and they want to short it.
Don't make me laugh. You're making me hiccup more now.
Yeah, a work marketplace that connects businesses with independent talent, whatever the heck that means. Freelancers, it's like a Tinder for people at work.
You go hire freelancers on it. Yeah, it's pretty whatever kind you want.
I'm just gonna say, wow, it has a lot of cash per share. It's got actual revenue. I don't know. Interesting one.
Oh, I can see your antennae picking up. Rock Lobster's liking this. Cash on hand, low stock price. They're singing your song.
I would say I don't know if this would be the best candidate. Maybe they think that market's drying up for an aggressive put like this. I have to say, I mean, they must be looking for some kind of big earnings surprise on the 26th, or hedging some stock. I mean, the stock was 25, so I mean they're buying the put at the dead bottom. You got a classic kind of doji candle pattern here. Not my favorite trade right now, I have to say. Like for a company that actually makes money, it's already $12.50. Not my favorite trade, unless they're buying stock with it, which I'm trying to see here. I'm looking at time and sales. They're putting up they're putting up stock. Let's see here. I'm trying to do a little filtering by quantity. So I want to see greater than 25,000. And let's see here. Yeah, there's no stock greater than 25,000 today. So I'm guessing that's so they're just buying these puts. I don't know, not my favorite trade right now.
Not loving it at all. I'm also not loving these hiccups. Let's see if I could scare them away a little bit of your mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block, the portion of the show where you folks take the reins. We also turn the spotlight back on you, like we did again this week with our question of the week. Back in January, as you will recall, we asked you folks, which of these asset classes, if you had to buy one out of the money call, 10% out of the money call expiring at the end of the year, which one would you choose? Gave you four choices: VIX, Bitcoin, WTI, or the S. And back then, 34% of you, obviously it was a pretty tight poll, but 34% of you took it with the old SPX, SPY. In fact, I do have the results right here. It was 34% for the SPX, 26.8% for crude oil, 25% for VIX, and no love, only 14.3% of you choosing Bitcoin. Obviously, Bitcoin was a good choice in that regard because in terms of fading it, because obviously it has pretty much imploded. But VIX, WTI, and the S were all within the ballpark of each other, even though the S took it with 34%. So we thought we would revisit that this week, ask you that same question. Excuse me, one of these four asset classes, you have to buy a 10% out of the money call expiring on the end of the year. Which one would you choose? Uncle Mike, let us go to you first, sir. And hopefully you are not also afflicted with my hiccups, sir.
You know what? I think I'll go with Bitcoin because, I mean, how can you possibly lose on Bitcoin, right?
I've heard you say that Bitcoin is awesome. That is your saying.
It is. You know me and Bitcoin. No, I'll go with the S, and I'll go with the S&P, and I think our audience will too.
Mr. Rock Lobster, same question for you. Which of these are you choosing? Which is our audience choosing?
Oh, so when you asked back in January, if you had to buy 10% out of the money call?
34% chose the S when it was at 4,600, I should add.
Wow. So what would I buy right now? Oh, I would buy the 10% out of the money call and the SPY for sure. What do I think people were saying? The peoples? I don't think our listenership is as bullish on big. I'm going to say SPY too. They're going to go. I'm going SPY. They're going SPY.
SPY, double SPY. Say you, Uncle Mike, of course, doubling down on Bitcoin. 47% almost, 46.9% right now saying the S. Excuse me. Wow. 34.4% choosing Bitcoin and 9.4% each. Another tie. Excuse me, 34.4% choosing WTI and 9.4% a tie between VIX and Bitcoin. That is interesting. Got about a day left. If you haven't played, listeners, at Options is the place to go to make your voice heard. This question came in a little while ago. It's right up Uncle Mike's alley, so I want to make sure we get him on the show. Comes from AJM. AJM wants to know, Uncle Mike, does it still make sense to buy puts? Does it still make sense to buy puts in SPY, or is it too late? Has the horse left the barn, Uncle Mike?
Has the horse left the barn? Well, I suppose if you're bearish, it's too late. But I mean, if you're looking for it from a hedging standpoint, I don't think it's too late. I just think you need to be more creative on your hedging by using some type of a collar or maybe a put spread or something along those lines. But if you're just looking to straight buy long puts and that's it, I'm not a fan of doing it with 32 VIX. So that is my thought on it.
Mr. Rock Lobster, same question for you, sir. Is it too late to buy a put, or has the horse left the barn? Hopefully he didn't buy it this morning, sir.
They were expensive this morning. Is it too late? I think it would be folly to think that we're not going to, plumb that 3,500 again between now and the end of the year. But I wouldn't buy straight puts. I've only been buying put spreads this year just because they're so expensive. So I'd say yes, if you want to. I myself personally am ambivalent. The vol is pretty high. I think the better trades actually are kind of going the other way, like long VIX, long SPY stuff. But yeah, I think as far as like the let's just call it the big money making puts, feels like it is gone unless, of course, the government does something totally stupid and we go to 3,000 SPX. So, but you're paying top dollars. All I can say right now. I mean, we're still close to the peak for vol for the year. So, you need the market to help you a lot. Although a 5% move intraday today is quite a bit.
That could help you if it wasn't in the wrong direction for all of our put buyers out there as we keep on rolling and we go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, let's do it. Let's go out to the land of Uncle Mike first. Mr. Uncle Mike, sir, what are you keeping an eye on through the weekend until our Monday show?
Well, I want to see if we can continue with this rally. 2% it seems like a lot because we haven't really gone up this much, and it feels like we never have. But seeing if we can continue with this rally, then watching the earnings coming out tomorrow in the financial space, and those are the things with which I'm watching right now.
Mr. Rock Lobster, same question for you, sir. What are you keeping an eye on until our Monday episode?
Well, I'm keeping an eye on this VIX, and I'm keeping an eye on these daily ranges. And I'm keeping an eye on the semiconductors. I just noted to, some people or my folks in the, in option pit that SOXL, that 3 times bear, 3 times bull was an $80 name. And I know it's 3 times and it has all those issues with day-to-day marking and stuff, but it traded $6 this morning. So I'm not going to say it's the bottom of the semis, but I did nibble. I bought a little Taiwan Semiconductor today. I don't know. I think the prices don't look too bad here, even stuff like AMD. So I'd say that's worth looking at and see. I know the Biden administration just I guess they're embargoing now some chips or something. So that sent semis to a new low level. So, again, at some point, stocks get cheap enough where you want to buy them. So I think the semis are definitely interesting. They are an interesting look down here.
Almost as interesting, dare I say it, as Oatly. You want more of that Oatly goodness? Tune in to all the fun we get into over there on Oddities tomorrow. That music means we are done with the fun, at least for this show, at least for today. Don't worry, all our pro folks hangouts. You can keep scaring me. I feel a little better now. Maybe those hiccups finally starting to go away. Keep it up, though. I'll need it for TWIFO. TWIFO coming up in about half an hour. You folks on the pro get it instantly, of course. All you on-demand folks when it hits the network later today. Let's go around the horn, listeners. Let's go back to the Uncle List of Mikes. Mr. Uncle Mike, sir. If folks want to enjoy all your various offerings, where should they go? What should they do?
Follow me on Twitter at Mike TOSAW, TOSAW. I put out a lot of content. And then if you wanted to speak to me directly, check out my website and contact me that way, stcharleswealth.com.
There you go. And Mr. Rock Lobster, sir, if folks want to get the edge in all things VIX or talk about this semi-index, where should they go? What should they do?
Yeah, go to 888-TRADE-01, ask for Ted or other Andrew, and they will be happy to set you up with one of our many option pit services to learn how to trade up.
I see the Oatly folks taking advantage of you on the put front, sir. I'm sorry to hear that. We'll discuss all that fun tomorrow on Options Oddities. Like I said, don't worry. TWIFO, still got them, listeners. TWIFO coming up after this show for all you pro folks. On demand a little bit later for the on demand folks. You want to join the fun, you want to get the giveaways, you want to get the exclusive content, including our double pro content, tomorrow, as well as, of course, live access to this and everything else we do. TheOptionsInsider.com/pro. Otherwise, see you back here on Monday for the Option Block. Have a great weekend and stay safe out there.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.